Hey there, future Wall Street wizards. Ever wondered how companies like Apple or Amazon make money? It's not just from selling iPhones or delivering packages. They use something called the stock market. Think of it like a giant online marketplace. But instead of clothes or gadgets, you buy and sell pieces of companies called stocks. These stocks represent a small ownership stake in a company. Now, why would you want to own a tiny piece of a giant company? Well, when the company does well, its value goes up and so does the value of your stocks. It's like owning a magic bean that grows into a money tree. But remember, just like any market, prices can go down too. That's the risk you take. Think of the stock market like a bustling city. There are buyers and sellers everywhere, all trying to get the best deals. This constant buying and selling determine the price of stocks. The good news is, you don't need to be a Wall Street hotshot to play the game. With a bit of knowledge and a sprinkle of courage, anyone can dip their toes into the exciting world of the stock market. Ready to learn more? Let's dive in. Okay, so you get the basics of the stock market, but how does it actually work? Imagine a giant seesaw. On one side you have buyers eager to snap up stocks they believe will go up in value. On the other side you have sellers hoping to cash out and make a profit. When more people want to buy a stock, its price goes up, up, up. It's like a hot new video game everyone wants. But if more people want to sell, the price goes down, down, down. Think of it like that old sweater you're trying to get rid of. This constant tug of war between buyers and sellers is what makes the stock market so dynamic, and let's be honest, a little bit unpredictable. But that's also where the excitement lies. It's all about supply and demand, folks. The more people want something, the more valuable it becomes. Don't worry though, it's not all chaos and guesswork. There are ways to analyze companies and make educated guesses about whether their stock will rise or fall. We'll get to that later. For now, just remember the stock market seesaw. Buy low, sell high. Let's break down some key terms that'll make you sound like a Wall Street pro. First up, stocks. Remember those pieces of companies we talked about? Those are stocks. They're like golden tickets that give you a slice of ownership in a company. Next up, shares. Think of shares as the individual pieces of a stock. If a company issues 100 shares of its stock, each share represents 1/100th ownership in that company. The more shares you own, the bigger your piece of the pie and the bigger your potential profits. Now let's talk about dividends. Think of dividends as a sweet little bonus for owning stocks. Sometimes companies share their profits with their shareholders by paying out dividends. It's like getting a thank you gift for being part of the team. Last but not least, we have stock exchanges. These are like giant online marketplaces where stocks are bought and sold. Think of them as the New York Stock Exchange, NYSE, and NASDAQ of the world. It's where all the action happens. See, these terms aren't so scary after all. Now you're one step closer to speaking the language of the stock market. Ready to jump into the world of investing? Hold your horses. It's important to start slow and steady, just like learning to ride a bike. Here's how to get started. First things first, you need to open a brokerage account. Think of this like your very own stock market shopping cart. It's where you'll buy, sell, and keep track of all your investments. There are tons of brokerage firms out there, so do your research and find one that fits your needs. Many even offer educational resources and tools to help you make informed decisions. Once you've got your brokerage account set up, it's time to fund it. This is where the real fun begins. Decide how much money you're comfortable investing. Remember, only invest what you can afford to lose. Now you're ready to buy your first stock. Choosing your investments. Finding your flavor. Picking stocks can feel like choosing from a menu with a million options. But don't worry, it's not as overwhelming as it seems. Start by thinking about companies you know and love. Do you always buy Nike shoes? Are you a die-hard Apple fan? Investing in companies you understand is a great way to start. Next, do your research. Read about the companies you're interested in. What do they do? How are they performing financially? Are they growing and innovating? Don't be afraid to ask for help. Talk to financially savvy friends or family members. There are also tons of online resources and financial advisors who can guide you. Remember, investing is a marathon, not a sprint. It's about finding companies you believe in and holding onto their stock for the long haul. Think of it like building a team of all-star players for your investment portfolio. Riding the roller coaster managing your investments. Congratulations, you're now a stock market investor. But the journey doesn't end there. Investing is like riding a roller coaster. There will be ups and downs, twists and turns, The key is to stay calm and enjoy the ride. Keep an eye on your investments, but don't check them obsessively. Remember, the stock market is a long game. Don't panic and sell everything at the first sign of a dip. That being said, it's essential to reevaluate your portfolio periodically. Are your investments still aligned with your goals? Are there any new companies you're excited about? Remember, investing isn't a set it and forget it kind of thing. It requires some attention and occasional adjustments to keep your portfolio on track. Patience, young grasshopper, long-term versus short-term. Now let's talk about time horizons. Investing is not about getting rich quick. It's about building wealth gradually over time. Think of it like planting a tree. You wouldn't expect it to grow into a mighty oak overnight, would you? Short-term investing, on the other hand, is like trying to time the market. It's risky and unpredictable, even for seasoned investors. Unless you enjoy living on the edge, it's best to avoid it. Remember, patience is a virtue, especially in investing. The longer you hold on to your investments, the more time they have to grow and compound. It's like magic, but with money. Avoiding stock market pitfalls. Don't be a fool. The stock market can be a tricky place, especially for beginners. There are sharks lurking in the water, just waiting to take advantage of unsuspecting investors. But don't worry, I'm here to help you avoid those pesky pitfalls. First and foremost, beware of hot tips and guaranteed returns. If it sounds too good to be true, it probably is. Remember, there's no such thing as a sure thing in the stock market. Next, don't put all your eggs in one basket. Diversify your portfolio by investing in a variety of stocks across different industries. This will help reduce your risk if one sector takes a hit. Finally, don't let your emotions get the best of you. Fear and greed can lead to impulsive decisions that hurt your portfolio in the long run. Remember, slow and steady wins the race. You can do it, investing for everyone. There you have it, folks. A crash course in stock market basics. It might seem intimidating at first, but trust me, it's not rocket science. With a little knowledge and a sprinkle of courage, anyone can become a savvy investor. Remember, investing is not just for Wall Street hotshots, it's for everyone. It's about taking control of your financial future and building wealth over time. So, what are you waiting for? Open that brokerage account, do your research, and start investing today. The world of the stock market awaits. Thanks for watching. Subscribe to the channel, like and share for more informative videos.